Kia ora. Welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. Now, Sharesies is a wealth development platform whose purpose is to create financial empowerment for everyone. My name is Frances Cook. I'm the investments editor for BusinessDesk. We have a special offer for Sharesies investors from BusinessDesk. If you use the promo code SharedLunch100, that's all one word, SharedLunch100, you'll get $100 off an annual subscription to BusinessDesk, which is usually $249, including GST. Now, the offer only applies to new BusinessDesk subscribers, can only be used once per subscriber, and can't be used with any other discounts. Before we get started, here's some important information. Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording. Now, also just a quick reminder, I mentioned the questions earlier. If you have any questions for our guests today, don't forget, you can also submit yours through the Ask a Question button down below. Don't leave questions in the discussion area as they are likely to get missed. I don't want to miss them. Please do be kind and respectful towards our guest and your fellow viewers. Otherwise, we will unfortunately have to take steps to remove you from the webinar. Now, today we are joined by Mike Roan. He is the Chief Financial Officer for Meridian Energy. Welcome, Mike.
Hey, thanks for the invitation, Francis. Great to be here.
Oh, fabulous to have you. Now, you have been the CFO for Meridian since 2019, but overall, you've been with the company for 14 years. That's an incredible stretch. What's attracted you to staying with Meridian for that length of time?
Yeah, hey, I have. I joke with people here that I'm growing old with them. There are a few grey hairs where they didn't exist before, but I'm a massive believer that everyone chooses what they do, with their life, and so for me, it's always been purpose. I've had a massive intellectual challenge at Meridian every day that I come to work. I'm challenged by something that's different, and primarily driven by the fact we don't control our fuel source, which is reasonably unusual for a business. We rely on Mother Nature to do that. I love the culture. So, we've got a constructive, collaborative culture. It challenges each other. And I'd be wrong if I didn't say, bring it back to that purpose is I love the things that we do as a business, because not only do they deliver good outcomes for shareholders, hopefully, but I can see the contribution that they make more widely to New Zealand, and more ambitiously maybe is small impact on climate goals that we have as a globe. So it's a pretty easy place to start.
Oh, a quick freeze there. That's okay. I'm sure Mike will be back in just a tick. There we go. Sorry, Mike, you were just saying.
Yeah, it's a pretty easy place to stay and work at, Francis. I think maybe last thing I'd say was, again, I'm a massive believer in applied experience. Is anything that we choose to do, it doesn't matter whether it's work or play, the more you practice it, the better you should become at it. And so long as you wake up with that enthusiasm and determination to prove yourself again, that applied experience helps avoid some of the challenges that you get when you just don't know what's going on. So I think experience in itself, not worth that much, but applied experience and enthusiasm for what you do goes a long way. So it's kept me here for, as you say, for 14 years. Been a lot of fun and a lot of hard work, but it's certainly fulfilled me.
Yeah, well, fairly significant company to work for. Meridian, New Zealand's largest energy generator. There are, now let me know if I miss anything here, but 5 wind farms, 7 hydro stations, commercial solar arrays. Skip across to Australia, you've got another 2 wind farms, 3 hydro power stations. In terms of the brands for your customers, you have both the Meridian and the PowerShop brands. Large beast. Is there any particular area within the company that you focus on the most?
Yeah, so we're a large company, Francis, as you mentioned. Pretty simple purpose, and I think it's a great way to frame up what we do. We got a reason for the things we do. Is we look to make clean energy for a fairer and healthier world, and I always think through the choices that we're making and do they line up with that purpose and what we set out to achieve. And because we do, I guess one thing, and hopefully we do it reasonably well, is we produce electricity to power people's lives and homes and businesses. Is while there are lots of complexities in managing that at scale, the fact that we do that one thing is it does help to simplify it in many ways. And hey, one pickup is might be useful, may not, as we go through the conversation, is we actually sold out of Australia earlier this year. So we sold
I
our
missed that.
Australia.
Tell me about why.
Yeah, so in fact, it's a great day to talk why, because the Australian market, we've invested into Australia for the last 10 years. Very careful investment because it's a different jurisdiction to New Zealand, and when you're investing anywhere that's new, there are a lot of things that you don't know. So we were quite careful over the years with the investments that we made. So we grew a business from nothing to reasonable size. We had over 100,000 customers. We were approaching a couple of 100,000 customers in Australia. Actually, we had 3 hydropower stations, a couple of wind farms, and a number of power purchase arrangements, which are just the right to buy electricity from another provider. And so we were committed to growing that presence in Australia, but we became increasingly concerned about the level of intervention in their markets. It's always easy to think that you can intervene in a competitive market, whether it be an equity market or an electricity market or any, really, as regulator or politician, but it often just creates constraints that then manifest other problems. And the layer on layer of intervention in Australia at a state and federal level, we started to get concerned about deploying new capital into that market and wondered.
All right. Well, we will make sure to come back to Mike on that as soon as he rejoins us, because that's a fascinating insight. Sorry, Mike, you were just saying you started to be concerned about putting new capital in.
Yeah, sorry about that. Technology is obviously playing up a little bit. We started to get a little nervous about the level of intervention, and we were wondering whether there would be someone better placed who had a real interest in continuing to grow the business. So we ran a process to identify who that might be and completed it in January. We stepped away from Australia, sold the business for $740 million Australian, and sold it to a combination of an infrastructure investor and Shell, who we were pretty enthused by Shell wanting to step into a renewable energy business, because don't feel that their business model of burning fossil fuels or taking fossil fuels from the ground is that sustainable. So see them step into a renewable energy business, we were pretty chuffed about. But it allows us to use those funds in New Zealand, because there's a lot of work for us to do here in New Zealand. And if I jump back to where I started, which is the reason I say it's reasonably topical, that what's going on in Oz, is just yesterday the Australian electricity market operator suspended the electricity market over there, and they're having some fundamental challenges with actually incentivizing generators to supply energy to consumers in Australia. So I feel like the sale, not only was it good for us, it was the right time, and some of the concerns that we had were relevant, but they manifested themselves in a pretty fundamental challenge for the Australian energy market yesterday.
That's a really interesting one for us to jump into because I think there has been, it's the cost of living is increasingly a political issue here. And we have seen some talk from the New Zealand government as well. We've seen Energy Minister Megan Woods has talked about the possibility of making what she called structural changes to the electricity industry. So, do you think that's a realistic possibility? Have you had any indication what that might look like? And would it worry you if that happened here?
Yeah, the first thing I'd say, I think anyone who forms a view on how a market should operate, they're always well intended. So people typically want better outcomes than what they're seeing right now. As I said, it's always really challenging when you try to do something that gets in the way of competitive forces, because competition tends to drive the best outcome for consumers, which is why we appreciate it. I think the risk of intervention, whether it be through the regulator changing the market rules or government looking to make changes, is always there. So it's a risk that always exists. I think it really, we're beholden to show that competition actually does a good job of delivering that outcome, which is what everybody is out for, is after in terms of driving reasonable outcomes for consumers. I feel the New Zealand environment is more stable than certainly Australia, and interestingly the UK, where they've had problems there as well through intervention. And the reason I say that is electricity prices for residential consumers in New Zealand have been growing below the rate of inflation. Inflation is topical right now, but well below the rate of inflation since about 2012. And wherever you've got a market.
All right. Technology is just getting us today, but I'm sure Mike will be back shortly. It's never taken long so far. There we go. You were saying about inflation. Tell us more.
Yeah, so I think wherever you've got a market that's delivering outcomes for consumers where prices and price increases do fall below the rate of inflation, then I think it gives people a degree of confidence. As I say, I never. There is always a risk that someone with good intentions will look to intervene, but it's a very difficult and challenging thing to do successfully. Uh, the only example that I could really give you, Francis, other than what we see is there's the New Zealand battery project, which is being explored by the Ministry of Business, Innovation and Enterprise, and they are looking at whether the addition of a pumped hydro, which is simply you have a big pond sitting above a hydro generator, and you pump water from a river up to the pond, and then you release it. And so you pump, and then you use the storage and release that water back into the river at a different time. It's called pumped storage, pumped hydro schemes. They're looking at whether a pumped hydro scheme would be a good development for the New Zealand market. We've got line of sight, and time will tell. So time will tell whether that's a good development or not. I think if the government wanted to invest further in our market, then that's their choice. They're doing that on behalf of taxpayers, I guess. So that's a choice that the government would take very seriously, and they would have to have confidence that it was driving good outcomes. So could that play out? I was going to say there's a direct example out of Australia again with the Snowy Hydro project, which was one of the interventions in Australia it's currently being constructed. I don't remember the capital cost estimates, but the initial estimates have been doubled. So actually, while they've got into construction, if we were talking a couple of $1 billion, the scale and cost of it is lifted to $4 billion, and the scheme isn't going to deliver the outcomes that had originally been intended. So again, I think it's great to know what the options look like, and certainly the government exploring whether they can achieve better outcomes is all part of the mix. As you know, we've got plenty of investors with lots of choice, and that again, those choices that people make are important and healthy part of the market. But will the interventions actually play out? I do come back to, it's really difficult to introduce a constraint on a market process that drives really good outcomes for people longer term. So I think people are careful, and we've been lucky in New Zealand that we've had a electricity market in operation for the last 20 years, and we can show the demonstrated success for the most part that it's driven.
Yeah, I mean, have you had any conversations there with government or government representatives about what they may be thinking on that front? And is there a sort of best case, worst case scenario for you on any sort of government intervention?
Yeah, so you know, we talk to government and the ministries frequently. I don't really see it as best case or worst case. I really do see it as government as a potential investor in our sector. So you know, they've obviously got investments in Meridian, Mercury, and Genesis already, and
Damn, that was getting so interesting. I'm sure he'll be back in just a tick. It is a fascinating sector of which the government is really focusing on. Sorry, Mike, we got you interrupted. Go for it.
yeah. So what I was saying, and apologies for the technology hookup, Francis. I think about the government being a potential new investor in our sector, and if they believe that they can get a reasonable return from investing in pump storage asset, and they feel it will also drive good outcomes for Kiwis generally, then you know, I can't see how that is a bad thing for our industry. Where I would be concerned, and I think the level of concern in the industry would be, is if in some way the government intervened but didn't take the risks associated with that investment on in the same way that industry participants do. And in that I mean, you know, we've got no guarantee of being paid for any investment we make other than by offering our generation into the electricity market and receiving a reasonable price for it. If the government was to require that, you know, it was paid a certain amount every year to cover the investment, then that would be a different type of investment that's being made with different types of risks. And by its very nature, that would change the investment framework and environment for private investors in the market. So that's probably, if there was anything that was sitting there, as that right to receive money as opposed to competing for the right to receive funds.
Interesting. And it has been, I mean, again, coming back to the cost of living, I mean, we saw just yesterday, we saw the news that household electricity prices have gone up about 5% for the average person. And there have been a few questions over recent years about how much customers are charged. There was that report from the major electricity users group saying pretty big accusations, really, that Meridian made 3.5 billion in excess profits, half of that over the last 5 years. Then we had the Electricity Authority put out a report estimating people paying an extra $200 a year for electricity on average, partly because of that Tiwai Point aluminium smelter contract. What do you make of all of that? Do you think there's an issue with power prices in New Zealand?
So simply put, no, I don't, Francis. I think if there was a better way of discovering what a reasonable price was, that you know, people would have come up with it by now. But what we do use is competition, and you know, everything that I see, as I mentioned earlier, everything I see in the trajectory for prices for me and you know for other residential consumers is, when we look at OECD, New Zealand scores favourably with electricity prices. So you know, comparatively as a country, are we able to compete internationally given the cost of energy? And the answer is yes. When I look at it from a inflationary perspective, your point, I saw that headline. I haven't had a chance to interrogate it, the 5% yesterday, but that's well below the current rates of inflation. So electricity isn't adding to the inflationary challenge that we have in the country. So, when I look at it, and I can use a really simple stat, is if you look through that same information, is people are paying less for electricity, and we call it in real terms, which is just try and put yourself back in 2012 and normalize the prices that we see today back to 2012, as people are paying less for electricity today in real terms than they were back in 2012. So I think my basic summary is competition works well.
There we go. I'm sure we'll get back to that summary soon, because that was some interesting points he was making there on the prices. Here he comes back. Sorry, Mike, you were saying in summary, competition works well.
Yeah. I think competition works well, but again, it comes back to we're beholden to ensuring that it works well. And so scrutiny by the Electricity Authority, scrutiny by the government and ministries, and really anybody and everybody, is a real important piece of making sure that the sector does support, ultimately New Zealand's wider ambition to improve our improve our quality of life. And so whether it was, the Electricity Authority's view on the Rio Tinto contract, which happy to talk about here if useful, but guided by you, or the work that's done by the major electricity users group that we looked at, we did a analysis to test the rigor of it and found that the numbers that they were presenting were inflated in our view. But that said, there are always different views. My point is focus and scrutiny. It's right that large business in New Zealand has high level of scrutiny. We should be open to it. We should be transparent. We should be able to present what we see as the rationale to support the things that we're doing. And ultimately, that level of scrutiny ensures that people do the best that they can to not only support the investment that people have made in their respective business, but, as I say, the ambition that New Zealand has on the global stage. So I don't know whether you want me to go into any of that in a bit more detail, but certainly happy to.
Yeah, well, it's we're going to switch gears a little bit, because I'd love to dive into the numbers a bit. I think a lot of our Sharesies investors are quite number nerds. So let's jump into you had a recent, reporting season has just gone by. You reported a fall in first half profits. You had net profit after tax 145 million for the 6 months to December, which was a fall of 36% on the same period a year earlier. So what happened there?
I like to talk to people at, so there's a net profit level, and there's what we describe as EBITDAF level, which tries to replicate operating cash flows. And I try to describe to people, follow our EBITDAF performance or our operating cash flow performance as opposed to net profit per se. Now, I need to be careful with that, because net profit is a generally accepted accounting practice, and so it's a GAAP measure, and it allows people to assess across businesses. But the challenge that you have with a business like ours, when you're looking at net profitability, is we enter into contracts to help hedge out our balance sheet exposure as well as our profit and loss exposure. So futures contracts for electricity, and we enter into interest rate swaps for balance sheet. And given the scale of our balance sheet and the size of market position that we do have, is those elements get fair value treatment each and every accounting period. And so you can see really big swings in the cost and or benefit of those hedges when you see net profit. So we tend to talk around underlying net profit, which takes those elements out. And what I'd say on a like-for-like basis on an underlying net profit is things were reasonably square with the year before. So we did have a reasonable and reasonably successful.
We will be coming back to that point soon as well, because there's some great analysis of the numbers that has come out that I'll be putting to Mike. There you go, Mike. Do you want to finish your thought?
Yeah, so we were, long story short, we were pretty chuffed with the first half performance. As I say, the accounting measures can drive variance in our statements, but when you work back up to underlying net profit and up to EBITDAF, which is where we try to get people to look as reasonably similar numbers to the year before. So financially, we're reasonably stable. We are pretty conservative in the risks that we do take. We're a reasonably substantial business, and we know that people who invest in us like the stability of our returns. And the biggest challenge that we have, if I go all the way back to the start of our conversation where I said, we were talking about what keep me here, is we don't control our fuel supply. I said we don't control that fuel supply. And so, as an investor in Meridian, the exposure to weather is actually one of the largest exposures I think investors take. And, we've just been through a drought again, January through April. So that's captured. We release monthly operating reports for people. So anyone who's been reading those operating reports would have seen that the production of electricity for us was down over those 4 months, driven by that drought. I won't give anything away in terms of financial performance for this half, because we'll do that in August and do that formally. But we have been impacted by drought over the first 4 months of the second half of this year. But
yeah, it's tricky that, isn't it? Because of course, in your section of the market, of course, referred to as gentailers, for those who haven't come across that before, you both generate the power and retail it, you sell it. And the analysts over at Forsyth Bar recently put out some work saying that Meridian and most other gentailers, to be fair, they considered had overvalued share prices. So did you see that, and how would you respond to it?
well, it's really hard for someone who works in the business. I would hate to suggest in any way that I am an expert as it relates to share price performance. My time's focused on, are we doing the things that we can reasonably do to drive profitability of our business, both in the short term and longer term. So how are we performing today? What do we think the world's going to look like in 10 years' time? And are we joining the two together reasonably with our activities? But I know that analysts have a reasonable view, and they also have divergent views. If I pick up on a theme that has sat out there for those who would take investment in an entity like ours, is an environment where interest rates are increasing. So your alternate investment opportunity to investing in Meridian, as I say, reasonably conservative, tends to release pretty stable dividend flow. So the equivalent of interest off some form of interest-bearing security. With interest rates rising, I think their view has been that the comparative investments that people could make are of more interest than they have been in the past, given that rising interest rate environment. But as I say, if I formed any form of view on share price, even for today or tomorrow, I'd be wrong. So I think I'm better to focus all my time on energy on doing the things that we can to produce that income stream and make sure that people.
Yeah. Oh, absolutely. All right. Well, Mike will be back with us in just a tick. But we will have to jump into your questions soon. And hello again, Mike. We've got you back.
Yeah,
But yeah, we'll have to jump into audience questions soon because there's some great ones stacking up in there. But
good.
super quick before we do that. Oh, and I will say to those who are watching, if you do have a question and you haven't dropped it in yet, drop it in. Upvote the questions that you like the look of, because that's very important in letting me know which ones to prioritize. And then, of course, before we jump into all of that, the last thing that I will put to you, Mike, is looking at the next 12 months. What is your high point and low point that you were expecting to see?
We got so many things on the go fronts. That is not an easy question to answer, but and the reason I say it is the operating environment over the next 12 months is reasonably stable.
Mm,
So that's not a highlight or a light at all. But so the electricity market, reasonable stability. There's not a huge expectation of demand growth over the next 12 months. There are a lot of assets that are being built. They will come online in a couple of years, but not over the next 12 months. But the reason I say it's hard to answer is we have so many things that we are focused on. As you and listeners will know, our largest customer provided notice of termination of its contract with us last January, so January 2021, and we developed a program to restore the consumption that would be lost if they do or did in fact leave New Zealand. And that covers everything from small New Zealand based industrial decarbonisation through to attracting new sources of consumption to New Zealand, like data centres, and finally the likes of global hydrogen manufacturing facilities to New Zealand. So, across those three elements of potential growth and change to mitigate the risk that the New Zealand aluminium smelter closes or Tiwai Point closes, we've had a lot on the go. It's all really interesting. I wish I had more time to explain kind of where we're going. I will say this is we have been really surprised by the fluidity and the positive change that's occurred over the last 12 months as it relates to hydrogen and New Zealand decarbonisation. And then, as importantly, as we've traversed that challenge, the outlook for global aluminium prices changed massively as well. And while we wrote a contract with Rio Tinto that, as you noted, got some scrutiny, and it is a very cheaply priced contract. We're on record as saying it's cents on the dollar. It's a one-off agreement to extend their tenure. It looks like it was a good thing to have done because aluminium prices have improved massively, and they're now talking in public, saying that they might like to stay. So, we've got the potential for a number of new sources of consumption, as well as retention of the consumption from the aluminium smelter that we are contending with and will contend with over the next 12 months. And that is super exciting, for anybody working in a business trying to land those challenges. It will test us, and I'm hopeful it will produce some highlights, but some of it's out of our control, in that those parties have got to want to connect and be part of the New Zealand electricity market and part of New Zealand, or stay in NZ.
Yes, that's some very relevant points. And actually, that is going to take us into some of the audience questions as well. So that's a really good segue. Hello and welcome back again, Mike. That's a great segue into one of the first audience questions that I would like to dive into here. Because that TY Point smelter, for those who haven't kept up on it, been going backwards and forwards on whether it will actually close in 2024. The latest indication I saw was it looked like it might actually stay open longer. And I'd love to dive into this great question from Jeff here. Is there a chance Rio will keep their aluminium smelter in Southland now that the pricing for aluminium, and particularly green aluminium, has gone up. I mean, what are the indications you're seeing? What is, even if it comes down to vibe, what is the vibe you're getting?
That is it. That was a perfect segue, Francis, into this question. Hey, we talk to Rio Tinto a lot about their operations in their business. They're in public record as saying that they would like to stay in New Zealand, and so their views on what they do here, if you read the papers, have changed. We've been really clear with investors, or hopefully we have, with investors, that at the point that Rio Tinto engages with us regarding a contract for 2025, so beyond the existing arrangement that we have, is we will release a market statement. So the fact that there isn't a market statement out there tells all investors that we are not talking to Rio Tinto about that contract yet. But as you point out, we look at it, and we look at global aluminium prices. They've changed massively from where they were beginning of January. So, at the lowest point, they were at $1,400 a tonne. They're now $2,800 a tonne. So they've doubled over a stretch of time. In fact, they were higher than that a few months back. So the outlook for aluminium is certainly stronger than it was. And the outlook is, I think the question was, for green aluminium powered by renewable energy is more important than ever. And if you look at what Rio Tinto have stated, so publicly again, they've stated their intent to repower their Australasian smelters. And when I say Australasian, they've got the Tiwai Point aluminium smelter here. They've got Bell Bay in Tasmania, which is powered by renewable electricity. And then they've got 2 smelters on the east coast of Australia, both powered by fossil fuels. They have publicly stated that they'd like to repower, and they're seeking repower those smelters with renewable electricity. And they've gone to market for an RFP for 4,000 megawatts of energy. They already get that in New Zealand, of renewable energy, sorry. They already get access to renewable energy in New Zealand. So, again, they're thinking about their role as a business and what their long-run sustainable future might look like. Feels like it's changed over the last 12 months, whether it be economics or a sustainable position as a large global entity. But we'll see. We'll see. We're not in control of it. And the one thing I can say to people on this call, and I'd say to people generally, is at the point we engage in something of substance, we'll release that to the market.
Fabulous. All right. Now we're going to try and whip through as many of these other audience questions as we can. So we'll make it somewhat quick fire, not truly quick fire, but slightly. This one from Stephen has got heaps of upvotes. So we're going to have to jump into this. With the big push by government for people to get into electric vehicles, will the power grid be able to cope with the massive increase in power required for charging these vehicles? What do you make of that, Mike?
Again, really simple answer, and then I'll go.
Oh no, we will have to wait for that really simple answer. I'm sure he'll be back in just a tick. And just saying, guys, as well, do jump in and upvote any more of those questions you want. Right, really simple answer. Hit us with it.
I think the technology might be doing it on purpose, Francis. It gives us great dramatic pause after a couple of statements. But the simple answer is yes. So that the electricity grid will cater for the increased consumption from electric vehicles. We will have to change some of the things that we do as people plug their cars in to their garages and or plug them into public infrastructure, so that we can cope with cars being plugged in at the same time. And we'll have to incentivize people to not plug them all in at the same time to avoid some challenges. So there are things that we need to change to accommodate that outcome. But I can tell you, as an EV driver, is one of the best decisions that I made was buying an electric vehicle. You learn that the Bowser, so having the pump at home, is phenomenally liberating. And the build of infrastructure around the country to support driving an EV between cities is emerging as people do take up EVs. But the simple answer is yes, we'll be able to accommodate it. There is a lot of work going on to ensure that that's as orderly as we can make it. And I can tell you I've had no problem charging my car in my garage, but I do it from about 2 a.m. till about 5 a.m. most nights.
Interesting stuff. Okay, there's this one from Fiona as well. What climate change risk assessments and what further actions have been carried out with regard to your assets and their vulnerabilities in the face of severe weather events?
Great question. So we do a lot in the space of being, I call it a good corporate citizen, but it's framed up as ESG investing, environmental, social, governance investing. It tries to determine whether the practices of a company actually support the long run interests of investors and stakeholders. And we put a lot of time into thinking about our contribution beyond our financial contribution to investors and the way they want to live their lives. Is probably the most relevant publication that we release is it's called a TCFD report. Right now, I won't get the history right, but it's the Task Force for Climate-Related Financial Disclosures. So if there's any investor that's interested in the impact of the climate on our asset base and our company performance, is look for our TCFD report. We produce it when we produce our wider financial statements. We produce it alongside our greenhouse gas inventory. It shows what the impact would be, and unsurprisingly, the impact, so we've done modelling over the next 30 years to see what the impact of climate change will be on our asset base, and we've factored the risks and opportunities that are captured in that document back into our asset management plans so that we will have a long run business that will harness the beauty that nature throws at us as opposed to be damaged by it. But unsurprisingly, climate change introduces some opportunity for us and it introduces some challenge. So the opportunity is, as the globe warms up, there will be more water that's released in the Southern Alps of New Zealand, which is where we've got most of our hydro storage, if our modelling is correct. So, which got reasonable confidence. So whoever decided to build those assets in that place back in the 50s and 60s did a tremendous.
I think we can all agree they did. They picked quite well there. And Mike is coming back now, but we're pretty much out of time, unfortunately. Mike, was there anything that you wanted to say just to finish your thought on that?
Yeah, the only other side, so good for shareholders, good for people thinking about renewable energy, will benefit from climate change. Of course, those same weather events are getting bigger. And so the amount of water you receive at any one point in time is likely to be bigger than it has in the past. So our assets need to be capable of withstanding those forces. And we've done a lot of work, but it's all captured in our TCFD report. I'd encourage people to have a read.
Fantastic stuff. Well, thank you to everyone who dropped a question in there. And of course, the people who upvoted questions so I could make sure that we at least got through those ones that you were the most interested in. I think we'll have to get you back at some point, Mike, because there was lots more questions that we could have dove into there. Big thank you to Mike for joining us. Thanks for tuning in, everyone who was listening. Really appreciate everyone's time. Now, next week on Shared Lunch, my colleague Dan Brunskill will be chatting with Greg Fleming from Salt Funds Management. Greg is the head of Global Diversified Funds at Salt. What a job title. It's a really interesting time to be in his shoes. I'm sure we all know it's been choppy waters for the markets lately. This week, the US markets entered what they call a bear market. Now, Greg and Dan will discuss what that actually means, what makes this period of uncertainty a bit of a unique one, and what that means for you as an investor. Now, a link to register for that discussion is being dropped into the chat right now. But until next week on Shared Lunch, enjoy the rest of your week and do stay safe.